All right, good evening, everybody, and welcome. Thank you so much, David, for having me here once again, and also Anka, thank you so much for having me on the call. I know today it's about Fibonacci's, so if you guys will please forgive me, I will not be talking about Fibonacci per se. More so than I will be talking about a strategy, which, based on all the stuff that you guys have learned from the other presenters, you might be able to apply the Fibonacci lessons that you learned from that on this. But I wanted to share this strategy because this is a brand new strategy that I actually discovered back in 2021. And when I discovered that, I kept it to myself for the longest time. And I literally just began sharing it literally about a month ago, or probably within the last month. I just started sharing that. But I've been keeping it close to heart. I've been sharing it. I've been using it on my own. And then, like I said, this year, because every year I try to update my courses and stuff like that. So this year, when I decided to update my course, I said, you know what, I'll go ahead and throw in this monthly breakout strategy in there. And so I am presenting it to the public for the first time. Last month when I was sharing it with my inner circle, our subscribers and stuff like that. So if anybody in here is one of my subscribers, you probably heard me talk about this strategy. For those of you guys who are not, I think you are in for a treat. And I really hope that this strategy is very, very simple, would allow you to see opportunities in the market. There's a saying I always have, which is the stock market is not random. And hopefully you'll see from here that that is the case. I do believe in patterns, patterns. I go by a theory that I heard from a gentleman by the name of Jim Simons. May his soul rest in peace. He passed away not too long ago. But he was the founder of Renaissance Technology. And he was the one I learned this from when he mentioned the fact that the stock market is not random. Everything is patterns. The key is to figure out the patterns that occurs in the market and take advantage of those repeatable patterns. If anything happens that is not a recognizable pattern, we simply ignore it. We do not want anomalies. We want patterns that can repeat themselves over and over and over. And ever since I heard him say that, that has literally changed everything I do. I search for patterns over and over and over that are repeatable, um, especially the quiet ones. I call them the quiet ones that nobody's talking about. And for the first time, hopefully you guys will be able to discover this new strategy and just know that you learned it first over here. Okay, so very quickly here is my risk disclosure and disclaimer statement. Simply, it just says that I am not a licensed financial advisor, so please understand that. Everything I'm sharing here today is for educational purposes only, so please understand that. Fair enough? Okay, so this monthly breakout strategy was a strategy that I created to help traders myself spot stocks that would typically break above the previous month's high. And I'll show you when and how that actually first started. But once I discovered this one pattern, I was like, I wonder if there's a way to figure out which stocks are going to break above the previous month's high. And if so, the cool thing about that is we can then find out, wait a second, depending on where the new month starts and where the previous month's high is, we have an idea of how much money we can make going forward. And this is really great for those who like to trade options, especially if you're the type of person that either likes to sell options or you like to buy out of the money options, call options. So if you sell put options or you like to buy out of the money call options, this would be one of the most perfect strategies to do that. Okay. This strategy was created by myself. So I am the author, originator, founder of this strategy, and I'm going to show you guys how this works. So let's begin. The way this works is that you would notice certain stocks, and you could do this on pretty much any time frame, but I prefer doing this on the bigger time frame, the monthly time frame in particular, because again, once I discovered this, then I know, okay, I know where the stock is going for the next month. What you'll find is after a stock has been pulling back, has been in a downtrend for quite some time, and when it's in the beginning phases of it beginning to reverse to go back higher, this is when this strategy really, really kicks in. Sometimes you might see it after the stock has taken off and is, at new all-time highs and running away from us and all that kind of stuff. But preferably, I like the ones where we've witnessed a pullback in the market, and then it starts heading back up again. And what you would then see is exactly what you see in my notes here. After about 2 to 3 months or 2 to 3 candles, if this is a weekly time frame or daily time frame, after 2 or 3 months of the stock rallying, what you'll find is that it takes a pause. And that pause can be showcased with a red candle, like you see right there. So sometimes it's 2 candles, and then you see a red candle that follows. Sometimes it's 3 candles, like you see in the chart right here, and then a red candle follows. Sometimes it could be up to 4 candles, 4 green candles, and then a red candle would follow. Okay. Um, this is what I then call the monthly rest. It's almost like the market is taking a pause. It's gone up for 2, 3, 4 months, and then it takes a break. Now, when it takes this break, most people are thinking the stock is going to reverse and it's going to go back down again. But what they're not aware of is the strategy that you guys are seeing right now. This monthly rest becomes the blueprint for the next move, meaning that now, if we are, let's say we are coming to the end of September now, should I see this on any stock in September, I have an idea of where that stock is going in October. Does that make sense? I have an idea of where it's going in October. So what this does is it creates a high probability setup where the next month pushes above the previous month's high. And that's all we're looking for now. If it goes way beyond that, that's extra, that's bonus and all that kind of stuff. But our goal is, hey, I have a very, very high, good idea of where the next month's high is going to be. Fair enough? And so again, after 2 to 3 months, so again, the logic or the pattern behind this is that the market had been dropping. It's a pullback or it's been dropping. And then it begins to rally back up again. It's in the beginning phases rallying back up. It goes for 1 month, 2 months, 3 months, 4 months max, and then it takes a break. Sometimes, like I said, it's 2 months, then it takes a break. Sometimes it's 3 months, it takes a break. Sometimes it's 4 months, then it takes that break. Okay. Once that happens, then now what we're looking for is the market to kind of go higher. So what you see is something similar to this. Okay. Whereby, again, after that red candle break, that rest month, what you see is that monthly breakout. So after the monthly rest, the next candle often breaks out above the high of the previous month. And so we call this the monthly breakout strategy. So far, so good. We call this the monthly breakout strategy. And all we're doing, we're not expecting it to go to all-time highs. Sometimes that's what it does. We're not expecting it to rally 200%. We're not expecting it to rally 1,000% or anything like that, because we're just talking about for 1 month. But the idea is that from the high of where the previous month is to where we enter, we have an idea of what we're going to generate in profit by the next month. And the cool thing is we know that it's only going to be a month. And so by the end of that month, we know that the trade is already done. We can walk away with some profits. Okay. Okay, so Michael is asking, why not more red candles like on left side of your slide? Um, when you say why not more red candles, I'm not sure what you're referring to as far as that's concerned. The strategy here, the red that you see on the left is just indicating that the stock has been dropping. That's all it is. Sometimes it could be multiple months, or sometimes it could be 1 month. Okay. So you said after your rest candle. So this rest candle, so why not more? Oh, there could be, but okay, I think I see where you're coming from. It's like, hey, why is it just one red candle instead of 2 or 3 or 4? Is that what you mean? Instead of 2, 3, or 4 red candles, why couldn't it? Okay, very good, very good. Sometimes it does happen that way. Okay, sometimes it does happen that way. But for the most part, what we're looking for is the very first one. Does that make sense? The very first one. Because more times than not, what you'll find is after that first one, you'll see. And again, part of that is because there's momentum in the market, and this is happening at the beginning. Usually when you will see 2 or 3 more is usually after stock has been going up for a while. Does that make sense? So, but the idea here, the difference between when you might have 2, 3 candles as opposed to the one where it just has one is that the one that has one, we're literally just making almost like a U-turn. Does that make sense? It's like we've been in a downtrend, 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 and then now it's just beginning to start heading higher. Conversely, you might find those that have been going higher for 2, 3, 4, 5, 10 months, and then it takes a break. Now that one might have 2, 3, 4 months of a break before it goes higher. And I'm gonna show you some examples of that. I think that's something that happened with gold. You might see 2, 3, 4 months of it just taking a break before it goes higher. Okay. But if you catch the ones, Michael, if you catch the ones where right after they've gone to a downtrend and then now they begin to start heading higher, which is what we want to catch, is that U-turn. If you think about it as a U-turn, when that's happening, that's when you catch this type of strategy. So thank you so much for asking that question. Super important. Okay. So again, this is what it will look like. On the left-hand side, this is what the setup would look like. The anticipation is that it is going to break the high of that previous month. Okay. Let me show you. This is an example. The very first time I ever saw this was based off of this stock right here, which is Bank of America. As you can see, I had my line at the very top. This is the very, very first time I ever noticed this. Okay, this was in 2021. And what ended up happening, it was like you could see that the stock went up for 2 months and then it had a break. Now, going back to what Michael was even, mentioning was the fact that we had these two right here. It started going up and then we had a break and it had 2 months here. So like I said, it's possible that that could happen. Okay. But now we have this right here where it takes that break. Michael said usually 3 red candles high of reversal. So one red candle might with an extension higher. That is correct. We can definitely get one extension higher and then we'll start seeing it go higher than that. Now, there are some rules, there are some intricacies of, making sure. So like sometimes when a stock is beginning to reverse, usually what you'll find is that, sometimes depending on what's going on with the stock, what's going on with economy and stuff like that, it might kind of like be accumulating for a while. But there's a way to tell when the breakout has began in earnest. And when that breakout begins in earnest, it'll go 1 month, 2 months, 3 months, and then boom, takes a break, and then it will continue going higher as well, right? And so that's kind of like what we're looking for. And again, beyond the scope of today's, I can show you exactly how to spot the difference between the two. But this is what we're talking about here, where now the stock then moves higher. So we can see that the stock started heading higher. It had been pulling back initially, then it started reversing back up. After about 2 months of really going higher, it took a break. And then the very next month, we knew that it was going to take out that $35 level, $34 level, and then it continues going higher. And so that's kind of like what we're talking about. Okay. Let me show you this on the chart. Let's go over here to Bank of America. I'm going to take you back to where it all began, which is this right here. So like I said, somewhere around here. Okay. Price has been going down. Now we're beginning to start heading back up. There's a major difference between this one right here and this one right here, simply because of, like I said, the scope of what we know. The idea is that we need to see stocks making higher highs and higher lows. Okay. Higher highs and higher lows. Once we see that, then we know, oh, you know what? There's a very big chance that we're going to take out the high of that red candle. The other thing is how big the red candle is and if it has a long wick. Those are some little tidbits that you might want to pay attention to when this occurs. If it's a very big red candle we don't want it taking out the low of any of the previous candles. Does that make sense? So if I put a line right here, I don't want to see it taking out this low right here, because the idea behind this is we want to see higher highs and higher lows. That's part of the setup. But then we can look over here. Oops, try that again. And we can see this and say, hey, you know what? When this happens, what's going to end up occurring is that chances are very high now we should take out that high. Okay. If you're up here and you have something like that, chances are it might not work so well. But once you have it where stock has pulled back and is now beginning to start heading higher, again, with all the rules that we have, we got to make sure, hey, this is something that meets our criteria. And before you know it, we know that the stock is ready to go higher. Does that make sense? If you find that, and again, making sure that we don't take out the previous low, the previous month's low of that green candle, what you end up finding is that the stock would continue to go higher. And because of this, again, you can start planning ahead of time. What type of trades you want to put on, where you want it to go. Recently, if you guys paid attention to companies like Micron, you'll notice that Micron had been in the news lately and been doing really, really well. Well, what most people are not aware of is the fact that this breakout took place again. Now, again, we started going down, started going down. We had two green candles, okay, but it didn't meet our criteria. Why? We didn't have higher highs and higher lows. The red candle closed below or was went below the green candle right here. So all that kind of like throws off that whole thing. But when it started up again, and we had clear higher highs and higher lows, and then we had this green red candle after 2 months, I was like, oh wow! If we put a line right here, what I do know is that we would take out the high of that red candle. Chances are very high. If it doesn't do it in this month, it would do it by the next month, typically. Okay. And so you can plan for either the very next month or you can give yourself a grace period depending on the setup, whereby you give yourself, okay, I give it 2 months. In 2 months or in two candles, this thing should clear that high. Fair enough. In two candles, this stock should clear that high. And sometimes it clears a high so well, like it did on Micron. Other times it just does exactly what the very next month did, which is it gets to that top, takes out the high, and come right back down again. But what we are banking on is the fact that it is going to take out that high. Does that make sense? And when you're able to spot this every single month, month in, month out, month in, month out, you can start building a list of stocks where it's like, okay, I know that this stock is showing what we needed to show. We go through our checklist of the things that we need to see. As long as all our checklist aligns, it is time to enter the trade. We'll enter the trade, sit back for the rest of the month, and see how far it goes. Sometimes we can sit back 2 months. I mean, this changes a lot because now, whether it's the type of options that we put on, or whether it's knowing with full confidence, say, hey, okay, if I get in, depending on where I get in, let's say we got in at the open up the very next day. If I get in at the open up the next day and I can see where this high is going, I can say, hey, you know what? Based on what I'm seeing here, from this low to this high here, oh, 19%. A 19% recovery is what we can expect. If we're looking at this and saying a 19% recovery in 1 month, in 2 months, is that something that could change the way we plan? Absolutely. Does that make sense? Now, it doesn't always have to be 19%. Some of them are even bigger, some of them are smaller. But the idea is, we can look at this now, no more guessing, no more wishing, no more hoping, and just say, okay, good. Over the next month, no more than 2 months, and we can get anywhere from 5 to 10%, 15%, 20%, whatever the distance is. Does that make sense? Whatever the distance is, 5, 10, 15, 20. But we can see it. We can see with our own two eyes and say, oh, okay, I'm okay with that. You can see another stock and say, well, this one has better potential, or this one has a slightly lesser potential. You can choose because, again, it's based off of patterns. The stock is getting ready to go higher. It's taking a break. We want to catch that rebound. That makes us know with full confidence we should be able to take out that high right there. There's no guessing, there's no hoping, there's no wishing. It's, oh, that's the high right there. So it's been set. We know where we're entering from. We know where the high is. And so we have an idea. And as far as timing is concerned, we know anywhere from that point to the end of the month or later. And part of the reasons why it might take a little later is because it depends on when we enter the trade. If we enter at the beginning of the month, if we enter at the end of the month, all that makes a difference in how this plays out. But the beauty of this is when you start hearing some of these stocks that did extraordinarily well, they were doing phenomenally well. Well, what most people were not aware of was this very simple pattern that occurred. And so when you see a pattern like this, you say, hey, wait a second, that looks like what on those monthly breakouts that Wally talks about. Chances are over the next couple of months, there's some good news that's going to come out. God bless you if earnings comes out during that period of time. We literally did that on Oracle, where I posted all over social media and say, hey, I'm willing to bet that Oracle is going to go higher on earnings. It is bullish. It is bullish. And part of the reason, let me show you this, part of the reasons why I posted it on my social media page, because I knew people won't believe me, was because, again, Oracle had the exact same thing. If I zoom in over here, you can see Oracle was going down already. All right. So it's been going down. That's one of the first criteria we need to see that the stock has been going down. Okay, cool. So the stock is going down. Then for 3 months, 1, 2, 3 months, it went higher. Notice that we have everything that we're looking for: higher highs, higher lows, higher highs, higher lows. Excellent. I noticed that the red candle did not take out the previous month's low. Okay, so it's taking a break. So at this point, now we're in September. Earnings is coming out on Oracle. I see this pattern and I'm like, yeah, this thing is about to gap up. And at the time, I said, you know what? If anything, at least it should take out this high up here, at the very least. The only difference was I didn't expect it to gap up as much as it did. So that's the only error in what I did, was that I didn't expect it to go that high. But at the very least, I said, wow, okay, here is a perfect setup of this monthly breakout. September's coming. Oracle has earnings in September. Oh yeah. By the time earnings comes and is done with, we should at least touch 260 area. Easily. Easily touch 260 area. What ended up happening to the stock? Went up to almost 340 before it started pulling back. Coincidence? I don't think so. This is what patterns are all about. Does that make sense? This is what patterns are all about. And this happens over and over and over again with multiple different stocks that you can do. We had NVIDIA. I don't know if you guys recall back in the day when NVIDIA was beaten up so bad. If I recall what happened over here, NVIDIA was beaten up so bad, right? It had been going through a huge struggle. We talking about, I mean, this is post split adjusted, okay? But at the time, let's just take it from $34 all the way down to almost $10. Huge drop. I remember very well because even at the time, um, at the beginning of that year, December, January timeframe, Kathy Woods decided to sell all her shares in Oracle, saying she didn't see a future in Oracle. And I saw this and I was like, you've got to be kidding me. Okay. I was like, you got to be kidding me. Michael is asking, do you avoid the earnings month? Not necessarily. Actually, earnings kind of helps out more than it avoids it. If the setup that we're looking for and it matches all our checklists, I will go with earnings because then that tells me earnings is going to do well. Okay. And now all earnings is not going to do as great as Oracle did. So please be aware of that. But what you might even find is again, it all depends on when earnings. If earnings is like middle of the month or the beginning of the month, without a question, yes. If earnings is towards the end of the month, this might be conditions that might make it go 2 months instead of 1 month. Does that make sense? So what ends up happening is with earnings, once we have the setups that we're looking for, the setups are there. Even if earnings comes along, either earnings is going to propel it higher, or earnings will have a very small impact on the stock, maybe stall it for like about another week or two, and then you'll see it take off again. And so that's where you might find it where you have 2 months or two red candles, or maybe the next green candle doesn't really take out the high and stuff like that. And then the month after that, you'll see it take it out. Does that make sense? And that's probably because earnings came out a week before the month was over, or earnings came out, 2 days before the earnings was over, the month was over, and then now it pulled it back a little bit. But usually those are just temporary. that make sense? Temporary. And so do we avoid earnings? Absolutely not. We don't avoid earnings. And anybody who knows me would know I've been talking about how there used to be a time when I used to be, scared of earnings. Now I'm not. Like I love earnings seasons now. And part of that is because I now know which stocks to be in and which stocks not to be in, which stocks is probably going to have a positive impact on earnings even before they make the announcement, and which ones are not. So much so, again, this is one of those strategies. Even if earnings doesn't go well, it has a small impact on the stock. And then we're talking about instead of by the end of that month, we're talking about, the next month, you should see things do well. Okay. But again, seeing something like this, we see the stocks been going down, going down, going down. We now have two back-to-back higher highs, higher lows. We have a red candle, doesn't take out the previous green candle. We look at this top right here. We say, look, that's where we're going. So depending on where we enter, if we close at $15 and we know the high is up here at 18 something, so depending on when we enter the trade, we can go from $15. Let's go actually 14 something. Let's call it 14.50. Oops, let's try that again. We can go from 14.50, let's call it 14 there, to about this high up here. And we're talking about 27% return in 1 month, ladies and gentlemen, in 1 month. Let me make sure I do this properly. I hope you guys can see what I'm doing here, right? I'm zooming in. We're saying if we enter where it even closed, I'm just dragging it out here. So if we enter here, we know where the high was of the previous month. This is the coolest thing about this whole thing. Again, it's like no guessing, no hoping, no wishing. What we are capitalizing on is the pullback that occurred that month. Does that make sense? It's the pullback that occurred that month. And so now we're saying, hey, if we know that this meets all our criteria, we get in somewhere down here, go all the way up here. So depending on where we go, almost 29% in 1 month. Now, are we going to catch the whole 29%? It all depends on how you play this. But what if you only caught even half of that? 15% in 1 month, right? What if all you even did was just catch a third of that? Less than 10% per month for that month, because we have a great idea of what is about to happen to the stock. No guessing, no wishing, no hoping, just patterns, ladies and gentlemen. Just simple patterns that almost nobody is talking about. Like I said, you probably heard it first right here at Right Side Trading. And um, this is just, how do I say this? I'm kind of lost for words. It's like, it's just, I don't want to say so simple, but it's so dependable, repeatable. Does that make sense? And you can calculate based off of less emotions. I mean, I don't know how else to say it, right? And so what ends up happening the very next day, bada boom, bada bang, does what it needs to do. In some cases, it even does better than that, right? So that's that. And then the next month after that, and the next month after that, and by golly. And so where everybody's like, whoa, wow, we didn't see that coming. How did you find that? It's like, it's just a very simple pattern that almost nobody talks about. Thank you. Reliable. I appreciate that. It's very reliable. And that's why I kept it on the wraps. Sometimes they tell you, why share your best secret out there? I'm like, I'm keeping this for myself for the longest time. And I've been since 2021. And literally last month, the month of August, was the first time I actually revealed this strategy. Okay. That's correct, Michael. Thank you so much for clearing that up. Yeah, it's like basically what I mean is like it's a very high probability repeatable pattern. And that's all I ask for, to be honest. I know that the probability of success is very high, so I like that. And it's a pattern that I don't have to second guess. Does that make sense? It's not a hunch. It's not a feeling. It's not an inside information that I need to know about the company or not company or anything like that. It's not some secret, you know, data that I had to like check out and find out about that nobody knows about. I mean, I guess maybe it is secret because most people didn't have never heard of this before. But it's just I know it's a very high probability setup. And so the only thing I did was, after all those years of seeing the ones that worked and the ones that didn't work, the ones that got delayed in the process versus the ones that did not get delayed in the process, you know, the ones that took off right away and the ones that took a while, paying attention to all this was what I just kept on perfecting and perfecting and perfecting to the point that it's like, okay, I am not worried about earnings seasons anymore. I'm not worried about what goes on in the economy. Most people who knows me would tell you, and I probably sound bad that I'm going to say this. I'm going to be shooting myself in the foot for saying this. But anybody who knows me, you ask anybody that knows me, I don't listen to the news. I don't pay attention to the news. I don't worry about what company it is. All I need to see is a pattern. And again, we do this every single month, just looking for stocks that can do what we need it to do. Why? Because we know if the pattern exists and it has a high probability, I'll take the trade. Take a look at this one, American Express. Same situation, just different stock, ladies and gentlemen. Okay? Same situation, different stock. Stock had pulled back. Remember when the market had pulled back pretty bad in, the beginning of the year, bottomed in April, which by the way, we called that to the spot, April 7th. Bottomed on April 7th, started heading back up. One candle, two candles, takes a break. Higher highs, higher lows. Bam, bam, bam. Repeatable patterns, ladies and gentlemen. The third candle was a red candle. That's our quote unquote rest month. This thing was almost like it had already hit new all-time highs and then pulled back. Well, everybody's like, oh no, it hit all-time highs. It's gonna go lower. I said, no, 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 no. This is a stock that is just taking a break. And understanding and seeing how the setup looks like for stocks that are taking a break versus the ones that are pulling back, two different things. So it's okay, it's taking a break. Great. All right. So depending on when we get in, from this point right here at 301 to the high that it has, that's a 9% move on the stock for that month. Or should I say, for the next month. So now it just all depends on where we get in. And again, even if all we had was half of that, that's a 5% move, approximately 4 point something percent, 4.5% maybe. Okay. If it's a third of that, that's 3% move on the stock. Okay. And then now, with a lot of these big companies coming out with their own leverage ETFs, can you imagine the returns that you can have? And that's not even talking about the option on this. We're not talking about the options on this. We're just talking about the stock itself. Because if we were to talk about the options, all you got to do is just say, okay, get either 30 days to 60 days max. That's all you need on the option. Let me see this. Okay, so this was in July, right? When this occurred. This occurred in July of this year. So let's go here to the trade tab here. July of this year. Let's go back here to July of this year. Let's see. Let's go. Oh, sorry. Bear with me for a second. Let's go to July. Okay, so the end of July, this is where we were. Okay, so we go back here again. We look at this at the end of July. Usually we won't do anything. We actually will be doing it at the beginning of the next month. So really the beginning of August, August 1st. So let's just say we go in, we see that all the criteria that we need is being met. August 1st, we come in and we decide to get into the trade. All right. So August 1st comes. Let's go here to August 1st. Boom. It's a Friday. You know what? Let's take Friday off. Let's start on Monday. We start on Monday, right? You look at the options and we say, look, anywhere from 30 to 60 days is what we're looking for. Does that make sense? If you want to play it safe, you can go 74, which is 74 days from now, October 17th. Or you can do the September 19th one, or you can do the September 5th. That would be 30 days right there. This would be less than 60 days, but this should definitely be over 60 days. So in this case, let's play the safe route, the safe route. Go with the October version. Okay. So we go with October. And then we already know, based off of this, we already have an idea of where the high is. So the high over here is 329. Does that make sense? 329, that's where the high is. So all we got to do now is just go out of the money to 329. So this is 329 right here. This is 330. I mean, this is 320 here, 330. Okay. Pick one of the two. Usually I will go with the lesser one, so 320 right here. You pay $6.50. That is at the beginning of August. Our anticipated date is that by the end of end of September, sorry, right? By the no, I'm sorry, forgive me. Go back here. This is the beginning of August. So by the end of August, we just bought the October options because we're trying to get 60 days out. That's what we're doing here. Okay. But by the end of August, we expect it to get done. Worst case scenario, by the end of September, we expect it to hit this high. All right. So now here we are, beginning of August. You get the October 320 at $6.50. Pay $650 for one contract, right? With the intention that by the end of the month, we should be in the money. If not, by October, we should be in the money. Okay. Now let's fast forward to the end of the month. Here we go. End of August. That's when we expect it. If not, by end of September. So here's end of August. All right. We take the same October option. We go here to the 320. Remember how much we paid for it? $650. By the end of that month, your $650 turned into 1,670 bucks. That's what we're looking at. Okay. And the idea here is that, look, as soon as we hit that high, take your money. Don't gamble with it. Take your money. If you want to stay in, at least sell it and then buy out of the profit you have. Go out there and buy, a little bit more if you want to. And that way, if you lose that little bit more that you invested, you still walk away with a profit. At this point, you're playing with the house's money. But the idea here is because this is a very high probability setup, and there's no guessing, no hoping, no wishing. We just know where to get in. Boom. Okay. It's not rocket science, ladies and gentlemen. It's just patterns. Here's another one, Caterpillar. Okay. Same story, different stock. I kid you not. This happens over and over and over again. Same story, different stock. What did it do? Came down, started going back up. We then have, again, higher highs, higher lows, higher highs, higher lows. We got all that. You see our red candle. That's our rest month. Key now is that we just follow the steps that we need to follow to make sure that this is a qualified rest month. Great. We get our qualified rest month. Now we say, okay, where's the high? The high is up here. So depending on where it closed, which was over here at $418, the high over here is at $440. That's a 5% move on that stock. You now know that you have an opportunity to make 5% on a stock like this. Does that make sense? You at least know. And so depending on how many stocks, and you can get anywhere from 10, 15, 20, 30 stocks like this every single month. The beauty of this is because this is a monthly, there's no rush to get in, whether you got in at 9:30 in the morning or whether you got in at 11 o'clock in the morning or whether you got in at 2 o'clock in the afternoon, doesn't really matter, right? Whether you got in today or you got in tomorrow, doesn't really make that big of a difference. There's a few occasions where it might like, oh man, if the stock gaps up and runs away from me, like let's say there was earnings or something like that. I was like, oh man, I should have got in the night before. But for the most part, barring any major, move and stuff like that, whether I get in today or get in tomorrow, get in the next day after tomorrow, not a big deal. The fact is we want to get in before it does what? Reaches that new all-time high or that new monthly high, not all-time high. In some cases, it does become an all-time high, but we're just trying to get to that new high. Does that make sense? Very, very good point, Raj. Raj says, I want you guys to listen to this. Very, very good point. Thank you for bringing that up, Raj. Listen to what Raj said. Raj said, look, if there's a high probability of it going up more often than not, which I totally 100% agree with you, then why not take advantage of time decay and sell cash secure puts? Okay. You could. I think that's what I said in the beginning. You probably didn't hear me say this. I said, one of the best two strategies you can use or option strategies you can use for this is either you sell cash secured puts or you buy call options. But you are 100% correct, Raj. Does that make sense? 100% correct. The only No, that's fine. That's fine. Now, I'm glad that you even brought that up because the way you even you pose that question hopefully helps other people that are also on the call too as well. Because if you now know, I mean, it's a very high probability setup, and I like the cash secure, but I'll be honest, since you brought it up now, the only reason why I don't worry so much about the cash secure puts is it depends on how much, premium you collect. Does that make sense? And you limit it to the premium that you can collect. That's all. That's all it is. But you're talking about, especially if you can, exactly, especially if you can sell some naked puts, you are good. Some of my millionaire students that I have, that's literally all they do. Like, I kid you not. That's literally all they do. They just find us like, look, I don't mind if the stock is being, put to me. Okay, let me go ahead and sell some naked puts, collect whatever I can. And some of them will start stacking. I kid you not. They start stacking these strike prices. You know, I mean, they're millionaires for a reason. They start stacking these strike prices, and then they just sit back and collect all the strikes they can possibly collect. And just sit back, and they have no worries in the world because we're talking about like by the end of the month, all these are going to clear. And if the stock is put to them, they're okay taking the stocks. And the interesting thing is, like, even if it does, I mean, the stock has to do a horrendous drop, which we still haven't seen, knock on wood. It has to have a horrendous drop for them to have to then, you know, get all those puts, all those strike price put to them. If it does that make sense? If it does, and we're not even talking about like rolling some of these on all. I'm not even going to go into that. Okay, not even going to go into that. UNH, it is setting up like that. Very good. Yeah, okay. Somebody's paying attention now. Look at UNH. Very, very good. You guys see this? Excellent. Who is that? SR555111. God bless you, man. That's a setup. That's a huge setup right there. Okay. Now, is this ready to go? Not yet. Does that make sense? It's not ready to go yet. Why? Because we still needed to take a break. Maybe it's going to take a break this month. So that means maybe October is going to be a red month. That's fine. Maybe not, but it's not ready yet. But I know exactly because I'm watching UNH myself. Let me give you one that's better suited for what we're talking about. Let me see here. Oh, no worries. Okay, no worries, no worries at all, man. Not to worry at all. Look at this one right here, Leonard Holmes. I want you guys to see this. This is Leonard Holmes now. Okay, so the only difference now is we're waiting till the end of September. So September is not over yet, but we need to wait to the end of September. Okay. But why I'm excited about this, September is pretty much what? How many more days do we have? 2 more days is all we have. We have Monday and Tuesday. By the way, Tuesday's my birthday. So hey guys, you know, um, 2 days are gonna be my birthday. September 30. I'm a Libra, right? So September 30. I'm looking forward to this. I was like, okay, let's wait and see. I just want to see how it's going to end. The way this is, I don't believe 2 more days is going to make that big of a difference on Leonard Holmes. Does that make sense? I don't think it's going to make that much of a difference on Leonard Holmes, but you know, there's no rush. Like I said, there's absolutely no rush. Thank you, Roger. I appreciate that, man. There's absolutely no rush. So we're just waiting. Sometime next week. It could even be after my birthday celebrations. I come back on Friday on that Saturday. I'll say, okay, let's see. But look at this, guys, depending on where we get in, right? Let's just imagine where we are right now. We're talking about 126 right now. Try this again. If you're looking at 126 over here to this high up here, we're talking about, hey, wait a minute. Leonard Holmes has about a 14% potential next month. Not too many people are going to be able to tell you that with confidence right now. Does that make sense? Leonard Holmes now has a 14% probability. No, let me rephrase that. It's not a probability. The probability is high. I'll say 80, 90% probability, but it has a 80, 90% probability of making 14% for the month of October. Okay. So what do? We start saying, okay, what are some things we need to see? I need to know when is earnings. Are we going to encounter earnings? And the answer is probably not because they just came out with earnings. Okay. Actually, that Earnings they came out with brought it back down like this. So they just came out with earnings. So let me show you guys this. Let's put earnings on, and let's go to the daily time frame so you can see this. You can see that earnings just came out, right? Earnings just came out September 18th. That's when earnings came out. Excellent. No problem at all. All right. So now I'm not worried about earnings until what? If it came out in September, October, November, until December. We're not worried about earnings until December on this company. So we don't have to worry about that. So we're talking about 14% 14% return. Even if we collect only half of that, how many people will be happy with a 7% return on Lennar Homes in the month of October? That makes sense? So how do we want to play this? We can play this anyway. Going back to what Raj said, if we go down here and say, look, I'm not expecting to go below this level. I'm not expecting to go below this level. Well, I still have to wait till September 30th, my birthday, to figure out, making sure that it checks all my rules. But if it checks all my rules, I'm just assuming right now that it checks all my rules. I'm looking at this, I'm saying 120. Okay, boom. 120, I go here to the trade tab. Okay, how do you want to do this? And again, the way you sell the put options is slightly different from how you buy the call options, but let's just go with 30 days. All right. I'm going to just go with 30 days. In this case, we'll go with the weeklies that we have over here. Let's go with the October 31st, right? So because that ends the end of October. So let's go with this one. And now we said 120 put options. We can collect $2.60 as of today. So $260. All right. $260. And we're talking about by the end of October, we walk away with that $260 easy. You can put on all kinds of different strategy because we now know where it is not going. Fair enough. If we did it the other way around, whereby we go here and we say, okay, where's the high? The high is 144. All right, cool. Now let me go back here to the trade tab. So this time we can either pick the October 31st, but usually I like to go 60 days out. So let's go with the November one. Okay. And we said 144. Isn't that what we said? Let me double check that again. We're saying, yep, 144. So we're going out to November. We pick the 144. So we don't have 144. We'll go with 140. I can buy this for $2.45 per contract, which is $245. I put up $245 on this. And my expectation is that by the time October ends, we should be in the money. Okay. And here's a very, very, very simple trick. It's not absolute. So please understand that. I'm just kind of giving you tips here and there, right? Just very quickly, if I say, okay, what kind of percent return can I get on these options now? I'll look at this 250 or 245. I say, okay, how many strikes before I get into the money? So I go 245, 1, 2, 3. That's 3 strikes. If I look over here, basically, I can buy this for 240, sell it when it gets in the money for approximately 750. It's not guaranteed, but somewhere close to that. So I have a ballpark figure of the type of return that I can make. Okay. So now if I say 750 minus 245, so we'll go 750 minus $245 will give me $500 profit divided by my 245. We're talking about a 206% return on our money if we trade these options. Or otherwise, we just walk away with anywhere between 7 to 14% return on Lennar Homes itself. Watch what happens in October. Don't say I didn't tell you. Okay? Do not say I didn't tell you. Any questions on this, by the way? Okay. There's so many different stocks that are lining up. I mean, this is one of the things I love. By the end of each month, ready to rock and roll. You know, um, you have companies like Ethereum right now that is doing the same thing. Okay, you have T-Mobile that is pretty much doing. Oh, T-Mobile, no. Okay, can you guys see why I said no on T-Mobile? Let's see how many people would be saying it. Does anybody know why I said no on T-Mobile? Anybody knows? Why no on T-Mobile? Okay, because notice what it's done now. It's taken out the low of the green candle. So we had two green candles, we had the red candle, but it took out the low. Okay, chances are it'll take a little bit longer for it to recover. So not necessarily what we're looking for. Fair enough. Not necessarily what we're looking for. Here is another one. Ooh-wee. Look at this one right here, guys. So we had a higher highs, higher lows like we need, right? Did not take out the lows, so we good. So what about this one? We start here, this low to this high up here. That's about another 12% on PepsiCo. 12% on PepsiCo. Okay. So that tells me it should not go below $139. All right. Let's go look over here. On PepsiCo, again, we go out 60 days, 30 days. Let's go 30 days here, 139. It should not go below 139. You can collect $3.50 or $350 per contract on those cash secured puts. Or we can come back here to the chart, say, hey, where's the high here? The high here is 157, $157. Go back here to the trade. Where's 157? We're going to go 2 months out just to be on the safe side. And again, there's ways that you can do it where you don't have to go that far out, but 157. We don't have 157, so we'll go with 155. Buy it for $1.13. It gets in the money. Your $1.13, your $113 will turn into $600 approximately. Guessing this? No guessing, no hoping, no wishing. All we got to do now is just learn what the steps are. Learn when it's time to get into the trade. And that's what this course is for. Okay. So here's my offer to you guys. This whole course, because I just literally just finished doing all this, you can go to this link right here, rightside.trading.com/breakout. And you can go in there and purchase the course. It's already fully loaded. You can download it. Once you buy it, you start watching this, record it. You can start seeing any questions you have. You can email me at info@rightside trading. But you can literally start. I'm talking about today's Friday. By Monday, you are ready to rock and roll, and especially by Tuesday because the month ends. I should say not the market. The month ends on September 30th. By Wednesday, you already know what stocks to get involved in. This is an hour and a long video. Okay. The price is $9.97, but I believe it's well worth it. It's an hour and a half. What you'll also get included with this is the downloadable slides that I use to show all the examples and all the details about the actual workshop itself. I will also show you how to build a scanner guide in there too as well. So you can go out there, you can find your trade. It is yours to keep. It's a one-time payment of $9.97. And you have lifetime access to this, so you don't have to worry about anything else. It's all yours from that point on. Okay. Is there any platform required? No, no platform required. Not at all. You can use whatever it is that you're using. I'll show you the indicators. That's one of the biggest things you'll see in there. And it's you can install your indicators. It's all the regular indicators that is out there. So it's just indicators that kind of helps you filter out the good ones from the not so good ones. That's all. But it's nothing special. You can use whatever trading platform you use. Just install the same indicators that I talk about in the work in the course, and you fine. Okay, you fine. Um, but again, every single month when you have that scanner guide, some of you guys might want big company stocks that are $200, $500 per share. Others might want the lower end stocks. You can go out there and find your own. Does that make sense? You can go out there and find your own. Nobody's stopping you from doing whatever it is that you need to do, but you now have a strategy that literally nobody's talking about. That makes sense? Um, you know what? Let me do something just to kind of give reward. I like rewarding people who might take action. Here's what I'm going to do. So it's $9.97. Give me 1 second. Okay. Here's what I'm gonna do. I just talked to Tanya, who's the one that helped me with all this stuff. She's creating a link right now. I'm gonna give anybody who decides to do this today, got to do it today, but she's creating a link. Once she's done with that link, I'll let you know. But we are going to give people half off, so it'll be 497 with this new link. Just hang on a second. I'm gonna see if she can get me this link. If she gets me this link, I'll give it to you guys for 497, but just today only though. Only today. Okay. And then after that, it goes back to the 997. But once she gets that to me, I'll give you that new link. So otherwise, go to this link that you see right here. You can still get everything, but you'll just be paying the 997. If she's able to create this before I go, then I'll give you this new link. But nevertheless, once you understand this strategy very well, you understand again everything I do. I think I tell people this all the time. I put my course together because I'm teaching this to my 13-year-old son and my 11-year-old daughter. And it's like I want them to be able to follow this instruction, be able to understand this, and be able to implement this without having to win. So this is why I do my best not to focus on the macroeconomics because I'm like they're 13 and 14 years, 13 and 11 years old. What are they going to know about macroeconomics, right? But if they can see these patterns and they can identify these patterns very clear, look, one, two, three, two, three, four green candles followed by a red candle, right? Make sure that the low of this red candle does not do this. Make sure that this doesn't hit. And then now we take it a little bit step further. This is the checklist. Go through this checklist. Make sure you can say yes on every single one of these checklists. If you have a no, you got a problem. Okay. You want to go with all the ones that say yes. Here's your scan. Run this scan. If you run this scan, you don't need a platform to run the scan. I show you exactly how to find them, all that kind of stuff. You can find these stocks every single month. And at the end of each month and the beginning of every new month, you just go through it, go through your list. You get a list of all these stocks, put them in a bucket, and you keep them there. That's something that everybody can do. Okay, so Tanya just came back. All right, what is it? tinyurl.com/breakout 50. Okay, hold on. Let me see something. Let me see. Uh, tinyurl.com/, what? Breakout 50. Okay. So I'm put this in the link right here. Guys, if you go to this link, instead of the one that you see instead of rightside.com/breakout, go to the tinyurl.com/breakout 50. You get it at 50% off. But again, it's only for today. Let me see if I did this right. Do I need to put www in front of it? tinyurl.com/breakout 50. Okay, there you go. Oh, thank you, David. I appreciate it. You could tell I'm not the savvy one. Let me click on this. Let's see. There you go. Okay, see? So take advantage of this. This is just for today. All right. So she literally just created this for you guys right now. Like literally just created this. So tinyurl.com/breakout 50. All right. You go in there, you get the same course, but it's just at 497. All right. Otherwise, you come over here and it would be 997. But you go into this tinyurl.com/breakout 50. Let me go in here one more time. So again, go to tinyurl.com/breakout 50. I think I need to put the HTTPL and all that kind of stuff in there too. HTTP and then // I think that's it. There you go. Yeah, so what I just did right there, hopefully you guys see it. All right. So it's tiny. There you go. This one right here. And you should see it /breakout 50. All right. So again, just go in there, take advantage of it. It's just for today only. Otherwise, then can go to the regular link, which is this link right here, rightsidetrading.com /breakout. You get the same thing. Fair enough. Oh, no worries. Attention, recording will stop in 178 minutes. You can re-invite to continue recording. I'm not sure what 178 minutes is, but I'm pretty much done now anyways. Does anybody have any questions? Any
Yeah,
questions at
ignore
all?
that. That's just some bot. That's some
Okay, gotcha,
Note-taking bot.
gotcha.
Someone I'm
No worries, no worries at all. Any questions at all? Hopefully this kind of like excites you guys. Again, I've been using this since 2021 when I first discovered this on Microsoft, and I have not stopped using it ever since then. Thank you, Michael. I appreciate that. Yeah, my birthday's coming up. I'm excited about that. My wife and I, we're going to a concert, and after that, we are going to be traveling and all that kind of stuff. So it's going to be a week celebration, is what we're doing here. Okay. Um, How soon will you would you have? Okay, so Ken has already bought this. Let me let Tanya know, and she will send that to you within 10 less than 10 minutes. Okay, let me just let her know. All right, she knows now, so within less than 10 minutes, you'll be able to get that. Any other questions? Any other questions? Go once, going twice. All right. Like I said, there's tons of stocks that are going to be set up. So watch the video, and then if you have any questions, I promise you, any questions. My email is info@rightside trading. You contact me at info@rightside trading if you need to clear up anything whatsoever. Just let me know. I will promise you that I will get back to you. I will answer those questions. Um, Best software platform to use this on? Honestly, any platform. It doesn't matter. It's a strategy, you know? So there's none. It's almost like saying, oh, what platform is best to use candlestick signals? And it's like, it's any platform, you know? So you don't need to have a platform. You just need to trade. It could be Robinhood. It could be eSignal. It could be TD Ameritrade. It could be Ninja Trader. It could be Interactive Brokers. It doesn't matter who it is. All right. The key is to understand this pattern because it's more of a pattern than it is a particular setting or particular, I don't know what you call it, but it's more of it's a strategy. It's a pattern that occurs that up until now, I've never seen anybody talk about this. Okay. Not a single person, not a single soul talk about this. Oh yeah, my link, very good. Thank you for that. Let me put it's info@rightsidetrading.com. Info@rightsidetrading.com. That's my link there. Again, ask me any question in regards to this. Once you get the recording, watch the recording you got now to the end of this weekend. Watch this. Be ready for Wednesday. You know what? What I might actually do too as well for all those who buy, what I would do is when I run my scans for, because you're going to see how to run the scans, but I'm also going to run my own scans on, well, okay, maybe not on my birthday. I won't do it on my birthday. All right, here's what I'll do. By Friday of next week. I don't want to make promises during my birthday weekend. I know we celebrate all week long, but by the end of that Friday, so next week Saturday, not this Saturday, not tomorrow, but the next Saturday, I will email you my list for everybody that purchases today. I will email you my list, or anybody that purchases altogether. I will email you my list of my skins. Does that make sense? Next week Saturday. And if you don't get it, just literally send me an email. Say, hey, Wally, I didn't get the email. Could you please send me your scan for the month of September? Okay, and I'll send you that. And yeah, I mean that's something I'll do for you guys. Okay, so just let me know in case you don't. If you don't get it, just remind me. Next week Saturday, which would be the first Saturday in October, um, I'll let you have the same list. How would that help you? It's just to verify that you ran the same scan correctly, and then I will rank. So maybe what I'll do too, I'll rank my favorite ones based on the same information that you learned, so you can see why I'm picking one over the other, just to make sure that you match the same logic behind how I'm analyzing this. And I'll say, okay, here's my favorite ones. Here's why I'm picking these ones over the others, and then watch how that happens. Okay. But yeah, yeah, absolutely. You're welcome. You're absolutely welcome. So I'll do that for you guys. But just again, if I forget to email one of you guys or somebody's emails gets mixed up somewhere, I'll let you know. Dave, thank you so much. I do have to go. I know I've ate up too much time. We're like 1 minute before the next presenter speaks. Thank you so much, David and Anka. You guys are the best. God bless you all.